Alright guys, welcome to my YouTube session once again. Today I'll be talking about how to use DXY to trade Forex and gold. I'm going to give you an insight on how to use this DXY, which is the dollar index, to trade Forex pairs and gold. Okay, so the first question which whoever comes to this topic will ask is this: what is DXY? Alright, so DXY refers to the US dollar index, which measures the value of the US dollar against a basket of other major currencies like the euro, the yen, the pound sterling, Japanese yen, Canadian dollar, and Swiss franc. So when people mention DXY in Forex, they are talking about how the US dollar is performing relative to these other currencies I just named. DXY is pegged against other major pairs like GBP. I'm going to list them, guys. It is paired to GBP. GBP. Okay. Then we have the euro. We have the Japanese yen, JPY. We have the NZD, New Zealand dollar, and we have the Australian dollar. So when we talk about the DXY, we are talking about dollar being pegged against all these major pairs. It is being pegged against this. Thus, we are trying to know the strength of this dollar relative to these other pairs I just mentioned, guys. Okay, so it shows the strength of US dollar in the sense that when DXY is bullish, USD is strong. Okay, so what we mean by this is when DXY is bullish, dollar or USD, let's say USD is bullish as well. That's to tell you that whenever your DXY is bullish, just know that United States dollar is also bullish or is strong. Let's use the word strong, not bullish. Sorry. Okay, whenever the DXY is bullish, USD is strong. Then vice versa, when DXY is bearish, USD is weak. So this is going to help you in your trading journey, whichever concept you're making use of. If you trade price action, SMC, ICT, algo, whichever strategy you use, guys, supply and demand, this is going to help you a whole lot. Alright, so I'm going to give you a practical example of when DXY is bullish and when DXY is bearish and what happens to Forex pairs. For illustration purposes, I'm going to use USD JPY for the currency pair. Then I will make use of gold as well for commodities to show you the similarities or to show you how this DXY makes an impact on gold, irrespective of the fact that it's not a currency pair. Alright? So let's dive into the chart we have today. Alright, so I'll be making use of this is the DXY. So this is the DXY and this is the 4-hour time frame, guys. Alright, so I want you guys to focus from this price point So focus on this price point, guys, for DXY. Then up to this point, I'm going to use this to illustrate what I was teaching you guys. So on the 4-hour time frame, you can see that DXY is bullish. Why? We are forming a series of higher highs and higher lows. And if you've been through my previous videos, you see where I notify the highs and the lows. So this is what DXY have been doing. Alright. So pay attention here, guys. This particular price point, which was on Tuesday, 13th February. So on Tuesday, before CPI, as you can see, DXY already gave us a higher low, which was here. This was our higher low. Then we were anticipating for price to give us a higher high, which was here. So before this move, guys, I was anticipating that gold will dump because of what? Once DXY is bullish, gold is going to be bearish. USD JPY is going to be bullish. GBP USD is going to be bearish. AUD USD is going to be bearish. Euro USD is going to be bearish. So we are anticipating that dollar will be strong. Then we are going to be buying dollar and selling other currencies. Okay? So before this move happened, if you take a closer look on gold, this was the same day on Tuesday. This was gold on Tuesday, guys. Gold was trading at 20.30 per ounce. If you notice this sharp move, this decline or this bearish move, you will notice that it happened the same day, which was on Tuesday. You saw how price dumped from this point to this point, guys. And if you check DXY, you will see that DXY was bullish. This same move that happened on DXY, you can see that is the inverse on gold. Gold was dumping. Alright, let's see USD JPY on the 4-hour time frame, guys. So on the 4-hour time frame on Tuesday, this was on Tuesday. So this was USD JPY as well on Tuesday. You can see that price was pushing up because dollar was strong. So we were buying USD JPY. Alright. Okay, so let's check this was on Wednesday. Or let's check this move. This was on February 1st. As you can see, USD JPY was bullish, creating a new higher high. Okay, let's check what DXY was doing on the 1st of February. Okay, so on the 1st of February, which was this was on the 1st. As you can see, DXY was bullish over here. So we saw that impulsive move on USD JPY. Alright, so let's see what gold was doing on the 1st of February. This was on the 1st of February. As you can see, at this price point, you can see that gold was dumping as well because of what? DXY is bullish. That means that dollar is strong because in gold we are trading gold against dollar. So once dollar is strong, we are expecting gold to dump, and when dollar is weak, we are expecting gold to buy. Alright, so with this information now. As you can see, currently gold is buying over here. As of today, guys, gold was buying. Today is Wednesday. Okay, from as of Wednesday 14th, on the 14th of February, from this point, notice what was happening. Gold was bullish, but on a short-term basis. Let's see what DXY was doing, guys. As you can see, this is a cheat code on how to trade DXY, or how to use DXY to trade gold and currency pairs. So as you can see, guys, from Wednesday being 14th over here, you can see that DXY has been dumping, causing gold to buy. And if you check USD/JPY, you notice that USD/JPY was dumping as well, guys. You can see there is no magic to this, guys. This was on the 14th. You can see that USD/JPY was dumping, guys. So with this knowledge now, you can predict gold movement and other currency pairs. You can predict their movement by typically knowing what DXY is doing, guys. So that is it for today. And just a bonus before we end this session. All right, so let's do a quick analysis on DXY, then predict where gold is heading to. Likewise, USD/JPY. Okay, so with our knowledge about an uptrend, guys, you know that for us to be in an uptrend, price tends to create higher highs and higher lows. All right, so let's take for instance that these are our higher lows. I'm going to mark it out. These are our higher lows. Then these are our higher highs, which was here. Okay, sorry, I'll use this arrow. Alright, these are our higher highs, then the circle are the higher lows. Alright, so currently DXY gave us this higher high, then the last higher low we saw was this price point. Okay, so let's assume we are still in an uptrend because we haven't seen any break of structure or change of characters here. So we are expecting DXY at least to continue buying, thereby causing the price of gold to fall and USD/JPY to be bullish. Okay, so this is my rough analysis on DXY. Because of what? We are unable to break this current low. We are unable to break it. So I'm expecting price to continue to the upside. Then with this knowledge now, let's check gold. The last low we saw was this. So I'm expecting gold to continue dumping, hopefully next week. I'm expecting gold to continue dumping unless we are able to break this last lower high, because price gave us this lower high before dumping to this lower low. So I'm expecting this move to continue, or we might see price pulling back or pushing back to this level. Because of what? Price might come back to take this high to act as double top, then it will dump. All right,